All right, welcome back. There can be no denying that it's been a difficult run as of late. Oof, boy, oh boy, my statement's gotten beaten up. Volatility has been with us for a while, and it's beginning to affect people in different ways. A survey from the Center for Retirement Research at Boston College finds policy uncertainty is pushing folks that are about to retire into delaying their retirement. So get a load of this. 21%. They've shifted their delayed retirement. Some other have moved to, 33% have moved to more conservative investments. 28% have boosted their emergency savings. So that really pretty much sums it up, really, doesn't it? Now, let's review that, right? Policy uncertainty is now pushing folks to delay retirement, shift to their investments to more conservative investments, and boost emergency savings. That's really affecting behavior. And can you blame them? I mean, a lot of people, not just retirees, will be shifting both capital and resources the longer this war and its knock-on effects play out, right? So that's interesting, but maybe a little bit of a common sense issue there. My next guest, he's in the thick of it. Please welcome to the show, Mr. Craig Bolanos. He's the co-founder and wealth partner at VestGen Wealth Partners up in Chicago. Thanks for being on the show, brother. This Iran war, the spike in oil prices, maybe some inflationary issues, all starting to maybe dictate how some people choose to maybe when and if they retire, what they may be doing with their investments. I guess that's all understandable.
Yeah, I don't think it's the news headlines over the last 5 weeks relative to the oil shock and the inflation spike with Iran. I think it's just a little dose of economic reality. People understand that solving for retiree healthcare, solving for cash flow in retirement needs to be a little bit more thoughtful and done with a little bit more intent. And I think that's one of the underlying reasons you're seeing a lot of people maybe delay their retirement a bit because they know that once they retire, they need to stay retired. And that extra year, that extra 2 years of work, whether it's full-time or part-time, can go such a long way. But yes, Scott, I don't deny the overtures of Medicare, Social Security, and some larger changes that are afoot just 6 short years from now in 2032.
Yeah, I mean, that's something that we're definitely going to be talking about as we get closer and closer. And there's an election that's going to be involved, and that's going to be a headline for sure. And a lot of folks are worried about it. I've done a story about how people that may be getting closer to retirement are worried about how much the Social Security fund may be running out, or at least the curbs they might put on it. To make sure it lasts longer, how frustrating that could be, because it's actually your money that's been sitting there all this time, and it might be more difficult to get that out. But that's a whole other show. We'll talk about that later. But you and I, in another conversation about maybe a few days ago, maybe it was last Friday, I can't remember, we're a little worried about the setup of the market because it was teetering a little bit. And it felt absolutely that way the first couple of days or at least yesterday this week. What are your thoughts now on seeing what Trump's had to say, what Iran's had to say, or if they've said anything, what we are expecting of our allies with the Straits of Hormuz? What's your overall, 30,000-foot view of this whole thing?
My 30,000-foot view is that everything should be taken seriously. I kind of thought the S&P would get down into that 6250 range, obviously to close out the quarter, the last trading day in March. Big significant rallies. We'll see how that holds based on the rumors of exchanging messages. But, markets tend to bottom on bad news. I don't know that we've had the bad news just yet. But I think, honestly, if history's our guide and it's the only guide we have, we're a majority of the way through some of the pain. And the reset in broad-based equities hasn't been that bad. The reset in certain industries like software stocks, no, that's been incredibly painful, but that has nothing to do with Iran. It has to do with artificial intelligence. So I would break it down to the following things. Scott, number one, the U.S. in a weird way benefits from higher oil in the sense that our GDP, our economic data, we're a net exporter of energy. But I get it, it hurts the consumer. Part number two, this market has something going for it. And I think, don't tell the secret, the U.S. economy has been stronger than consensus believes. And the longer that lasts, the longer this market can continue to climb a wall of worry. Number three, I know that the Fed's not cutting rates 29 days from now. You and everybody else knows that too. But I think the Fed is clearly focused on the other side of their dual mandate, which is maximizing employment. And that means I think they're going to have to give us at least another rate cut. And the Fed is still easing. Let's not forget that. And then number four, we will start counting the profits from all those earnings per share reports. And I just don't think the earnings are going to have fallen off that much. I think productivity remains a key thematic. And for that reason, at 30,000 feet, it's no longer Goldilocks, but it's still okay.
Yeah, that was way more than I bargained for. That was fantastic, actually. And I think you're right about those earnings because when they come in as good or maybe not as bad as expected, then there's going to be some folks out there that are still waiting to find the bottom of this market and miss it, and away we go. And that could be some more fuel to the fire on the upside this time instead of the downside. But boy, that was great, Craig. Really, really enjoyed that. Thank you very much. Have a great Easter with your family. Craig Bolanos coming to us from Chicago, Illinois.